Welcome to the Big O Money Show. My name is Bill Altman here with the Premier Advisory Group, and we're going to have just a great show today. Up in Minneapolis, Gradient Investments. We have Tony Shore, my longtime co-host. Thanks for being here, Tony. Fabulous time. And then we have the Michael Binger. So we have to make sure Mike's president of Gradient Investments, been in the investment industry for a very long time.
Longer than I want to mention right now, Bill.
No, that's okay though.
Well, he started when he was 10.
So I've been in it 38 years, started at 10. Yes.
Exactly.
I like
38 years.
38 years I've been in this industry.
Wow.
Yes. Good. Yes. That's awesome. So Mike's a very important part, as well as Tony, of our company. But Mike's in the money management business, and really looking over and building portfolios, and manages a large team of investment people here that make sure that our portfolios are doing what they're supposed to be doing, whether it's a dividend portfolio that's focusing on blue chips in US, or it's an international portfolio, or an endowment type of ETF, or maybe it's buffered index with structured notes, all kinds of different things, or the bond market.
That's correct.
And we've had a lot going on the last several years, and I think we can say that for the last 100 years, right, Mike? We've had lots going on.
Every year there's a lot going on.
Right.
Yeah. You know, I like to say I've been in this business for 38 years. And Bill, guess how many of those years there's been no issues and no concerns, and people aren't fretting about anything at all, really?
I'd probably say zero.
Zero is right. Zero is right. Yes. We're always worried about something and watching the landscape out there, but that's what our investment team is doing. You know, frankly, 24/7, they're knee deep into the investment landscape.
As many of our clients know, and many people around the Omaha area that work with us in some capacity, we are a full service financial advisory firm, and not only on just the investment side, we are a fiduciary. So our goal is to make sure that we're focusing on your best interest. That should be key and paramount in everything that you do, whether you're repairing cars or managing a portfolio, whatever it may be, but also on the insurance side, the Medicare, life insurance, annuities. We have a full service CPA firm built in. Estate planning is a big part, making sure you have your wills and trusts and powers of attorney. Everything really has to match up, and that's important to us. When it comes to money management, we're really looking for, obviously, the experience part, but who aligns with our values. And we feel that Gradient Investments and Mike Binger's team over here, and right now we're in Arden Hills, Minneapolis, Minnesota.
We're in Minnesota right now.
Yeah.
That's right. That's right. Beautiful. And frankly, it's a very sunny, beautiful fall day here.
Yeah, it's gorgeous. Absolutely. And they have a gorgeous building, fantastic studios. I'm fortunate enough to come up here multiple times throughout the year. And when I do come up, we try to make sure that we get into the studio and record a show live. And usually it's Tony and I that are just bantering back and forth. He's in Minnesota, I'm in Omaha. So, but now we get Mike in, so we get the big hitter in.
The
Mike,
big guns, the big guns, a huge get for the show, Bill.
And Mike, I'm going to start you off with a question. I had a question from a client, and this client's, I don't have faves, but you know, everybody has faves.
Yeah.
It's like Coach Prime said he has faves, like favorite kids.
Okay. Yeah.
Did you hear that?
I haven't. You'll have to
really
back. You know,
he said everybody has faves. Don't tell me you don't have a favorite kid. So I'm not going to go there. All my kids are favorites. Tell you that. However, this is one of my favorite clients.
Okay.
Yeah. Name is Craig, and Craig is definitely concerned. He's retired. He's concerned about the economy, and he said he heard on the radio. This is just this past week here. Heard on the radio the market will lose 40% if President Trump has his tariffs overturned by the Supreme Court. What do you think about that, Mike?
Okay. I think what the person who originated this 40% downdraft is probably referring to if the courts overturn the tariffs, which means they halt the tariffs, but then we have to pay back the tariffs that we already collected. Which I think, number one, I think that's a very slim chance of happening. Now, they could limit the amount of tariffing we do and all that, but I mean, tariffs is more, that's a decision that's made by the administration, not really by the courts or Congress or Senate or anything. It's an administration, and they work with all the trade groups around the country to get it right. And really, when you look at it, Bill, you know, before this year, we were collectively tariffing all the imports that came into our country at about 2.5%. And all of our exports collectively were being tariffed, in the mid-teens. So that's kind of an unfair balance there.
Sure.
So this administration says that's unfair, and we want to balance this out more. And that's why we're kind of settling in right now at about a 15% tariff rate. So number one, I don't think the courts have the ability to do that. But even if they did, we're not going to be paying back tariffs. And even if we did have to pay back tariffs, a 40% drop in the market is a lot. The market's not, I mean, there would probably be a setback, but I think it'd come back very quickly because in general, things are looking pretty good out there in the investment or fundamental landscape right now as far as the market's going.
There would have to be a lot more priced into that type of drop than
Very, very
just
much
that
so.
piece,
Yes,
right?
exactly.
Yeah, and so I think I'm going to read between the lines, but there's a lot of noise. There's constantly
is.
noise in our
Oh,
investment
yeah.
world, right? And everybody's
Yes.
talking and everybody's concerned about this or concerned about that, or just because this person's president or
Mhm.
that person or whatever the situation, the government shutdown, whatever's going on, there's so much in the background, so much
Right.
drama that's constantly telling us to do one thing or trying to tell us to do one thing. And maybe that one thing is invest everything you have, go all in,
Well,
or maybe it's pull everything out,
Yeah,
right?
yeah. So generally, Bill, when you hear these very sensationalist type of statements like, "Oh, the market could drop 40%," most likely that's someone who's trying to sell you something, and they're going to say, "Look, the market is going to drop 40%, and I have a solution for you that I'd be willing to sell you to protect yourself or to benefit from that or whatever it may be." I mean, sensationalism sells.
Mm-hmm.
Bold statements like that, be it true or not. I mean, that's not something you'd say, no, that'll never happen.
Fear
Or,
sells.
yeah, fear sells, or no,
Mhm.
yes, it will happen.
Yeah.
But we do know that sensationalism sells. And that's generally when you get that email or, you hear something on the news or whatever. I mean, they're basically bold statements trying to sell you something or be more sensational than the other guy. So we discount that as noise.
Mhm.
If there's something that's sinister like that in the landscape, we would surely sniff that out and let our people know.
Very good. And that's what we try to do too, and really more
Mhm.
focus on the management of the client. Mike, if you were going to retire and you're a client of mine, we're going to back into the income that you need in
Mhm.
retirement. I'm going to start there.
Yeah.
I'm going to start, and Mike's going to say, hey, I need $8,000 a month net every single month. So that's what I need to hit the bank account after taxes. And so I want to know how we're going to get there. Then we're going to find out what your accounts are like, right?
Mhm.
What's your
Yeah.
401k? What's going on?
How do we solve for that?
And how do you spend? What's your
Mhm.
budget look like? And we
Yeah.
go on for that. So we solve a little bit different way, but certainly we do not solve with fear.
No.
There are so many wonderful investment options out there. Whether it be just the straight stock market, if you're just a securities person, you want to be just in that pure ownership role, you want individuals, that's fine. We got to just make sure it fits your situation. If you're our fixed income person, we go back to Wayne. He's a great fixed income guy,
Mhm.
right? You still talk to Wayne a little
I
bit?
do. Yeah, I
Yeah.
do. Wayne was our first investment officer at Gradient Investments, back
Yeah.
in the day.
Tremendous guy.
Yes,
Yeah.
yes. Institutional fixed income
R-
investment manager. Yeah.
Bonds.
Right.
He was
Bonds. He was a bond guru.
when
Maybe
the
you're
bonds were
yeah.
doing great. He was
Yeah.
Yes.
doing it.
Yeah.
Maybe you're a passive person and
Yeah.
just want just ETFs. Just kind of let things rebalance as they
Mhm.
go.
Mhm.
Maybe you're annuity. Maybe you're big safety side and you
Mhm.
really want the annuity. There's a really good mix
Yeah.
for you, and it kind of really depends
Yeah.
on your risk tolerance, your sleep well at night score. How well do you sleep at night? Are you going to bed worrying about your portfolio? If you are, there's probably some changes you need to make.
Exactly.
Right.
Exactly.
But if not, that also could be an issue. If you're never
Yeah.
worried about anything, that could be a problem too. That's why it's really important to work with someone like us. We're on the streets, so we are talking to the retail investor on a regular basis.
Mhm.
That's our job at the Premier Advisory Group, right on 120th and Stonegate between Blondo and Maple, right in Omaha. That's what our team does. Then we have partners like Mike and his team at Gradient Investments, right? And so they're our money manager, or third-party money manager. And what they do is they're in charge of managing the portfolios. They're the stock pickers or the traders. They're making sure things go the way they're supposed to go within that particular portfolio. Now, they're not mind readers by any stretch. They're not magicians,
Right.
right? That doesn't happen, but they're very smart. You got 38
38 years.
38 years in the industry. He's a
Wow.
chartered financial analyst. You have several of those on the team. You have a ton of traders, ton of CFPs. These people are not on the streets, right? Can I say that? I mean, they're
You
not.
can.
You don't have clients, retail
No,
investors
they're-
coming
they're-
into this
they're-
office
they're-
dealing
no,
with you.
we
Yeah.
our clients are really independent financial advisors,
Right. They're us.
like you are.
Right.
Yeah, and we create investment portfolios, investment strategies, both stocks, bonds, structured notes for your clients to invest in,
That's right.
to get them to where they want to go down the road.
And for us to be able to do that with any level of efficiency, it would be very difficult without really staffing up tremendously. You'd really have to staff up. So, in turn, a lot of companies like mine will utilize a company like yours to make sure that those portfolios are being built and managed properly. And that allows us to do our job and sit with the client as much as possible. We have what we call an open door policy in our office. We've talked about it on the show before, where whether it's an employee or a client at any time, don't think that if you've been in once this year or twice this year, you can't come in again. And that's not how we work. So the way we do things with Mike and his team and all of our partners, it allows us to be there for you at all times instead of really trying to juggle different things and being a jack of all trades, master of none.
Well, the way I really look at the relationship, and I've seen it countless times, and you're the real poster child of this, Bill, is that you want to be the general manager of your client's financial wherewithal. And by doing that, you need to, intimately know every client you have, understand what their risk and return objectives are, and then use all the financial services products that are at your disposal that are created and managed by investment professionals or insurance professionals or derivative specialists. You lean on those people to bring the products to you so you can mix and match them and provide the customized financial plan attention that your clients deserve.
That's exactly right. Yeah. So no, that's fantastic. And thanks again, Mike, for being on. And Tony, of course, I never want to forget Tony. And I want to mention Kolache Factory real quick on the show.
The Kolache Factory.
So I drove up to Minnesota on the way to driving up to Minnesota, 6 a.m. stop at the old Kolache Factory in the Big O. Okay. They're down to a location on 84th and Center, right off the freeway there. Not Center, but 84th right off the freeway, and brought a whole big gamut. I think we cleaned them out this morning.
You cleaned them out.
They're like, if you take all these, there won't be enough left for everybody else.
And if you don't know what a kolache is,
well, I'm one of those who don't know what a kolache is.
It's a round, soft bread roll stuffed with amazing ingredients, and it's made fresh, and they're delicious. I believe it's a Czech food from Czechoslovakia.
It's a potato, egg, and cheese. I mean, it's like, think of
sausage,
like
egg, and
a
cheese.
homemade Hot Pocket, like in kind of like a ball. And inside it's like eggs, potato, cheese, or bacon, sausage.
By the way, I haven't seen a kolache yet today, so I'm not sure
where
I was.
You were just a little late to the game. We had a pre-meeting. That's okay, Mike.
They're in the refrigerator, and you just heat them up for 30 seconds, and they're 40 seconds. They're good.
So that's our shout out to our unpaid advertiser.
Yeah, thank you for stopping on your way and bringing that for us today, Bill.
Oh, you're very welcome.
Bill opened the bag, and people came out of the woodwork. Like he had 20 people around him instantly.
So Mike, let's talk about what's going on in the market today and what's going on with the economy. We've had another pretty good darn market year, right?
We have. And I think 25 surprised a lot of people in the markets just because 23 and 24 were so good. But, we've always said, look, it's not what the market did last year or the year before doesn't determine what it does this year or next year. Markets are driven by fundamentals. And we know that investors love certainty and they do not like uncertainty. And so when you saw the market correcting earlier in this year, and it corrected pretty severely when the tariffs were announced, people were uncertain about what would happen to tariffs because we were hearing numbers of up 50, we're going to tariff these people 100% or whatever that may be. But certainty has crept back into the market, and a couple of things came out. So it seems like tariffs are here to stay, but we're having certainty that they're going to fall around this 15% tariff rate collectively. So we kind of know that for certain. there was some confusion about taxes because, as you remember, the tax cuts that helped Americans and American businesses were set to expire this year. Well, the big beautiful bill actually extended those. So lower taxes are more certain right now, which the market likes. So we have the two T's, tariffs and taxes, and things have fallen into the certain range where people aren't expecting any more surprises there. Now you layer on top of that the economy continues to do well, that corporate America continues, and this is of utmost important because we invest in companies. You know, people talk about markets and economies, all that, but at the end of the day, you're investing. If you're a bond investor, a stock investor, you're investing in companies, and corporate America is doing very good. In fact, we are seeing double-digit earnings growth in all 3 quarters so far this year in 25, in the first quarter, second quarter, and now the third quarter, which is almost done. So that's an upside surprise, which is great. So corporate America is certainly flourishing. The only thing that we're seeing that's a little bit would make one hesitant is that stocks are, as you would expect, if you've had a few good years, stocks are more on the expensive side. But that's the lowest thing on the priority checklist as far as what drives markets. As long as stocks are expensive for a reason, it's that the economy is doing well and corporate America is doing well.
Mm-hmm.
So stocks can stay expensive for a long time, so people shouldn't get concerned there. So when you look at things that are certain, taxes and tariffs are certain now, and the economy is doing well and corporate America is doing well. And that's a great backdrop for markets to climb and continue to climb.
Do you think our leadership in Washington has a little bit more certainty as well, and that's kind of helping things out, where we know that it's just not going to be a waffling decision? I don't know, but I kind of see that myself. Like it's a very stern approach.
Yes. So this administration, they campaigned their platform on a lot of different mandates.
Mm-hmm.
Some people liked them, some people don't. We all watch the news and we know that, right?
Mm-hmm.
But the things that they campaigned on, they're executing, and that's certainty also.
Mm-hmm.
And that's the beauty of this country is that, you know, we vote people in and we hope they execute to what we voted them in upon. And if we don't like that, we have the right to vote them out 4 years, 4 years later.
That's
But right now, the administration is executing to the plan that they platformed and politicked on.
And pretty much everything, right?
Yes. And those policies tend to be pro-growth and pro-market type of policies that the market likes. So what I think we're seeing right now is the market is certain that this administration isn't going to get in the way of what's already a strong market cycle and a strong economic cycle,
right?
If that makes sense.
And right now, as of this recording, which is on Thursday, the 12th,
Wednesday, the
12th,
the 12th,
Wednesday. They usually record on Thursday, on Minnesota a day early.
Yep.
So we got Wednesday the 12th. It airs on this coming Sunday. We don't know what's going to happen at this point today, right now, where we sit in Studio 1A in Arden Hills, Gradient Financial Center. We don't know what's going to happen with the government shutdown. We think it's going to pass, right? That's a vote later on today, about 6 p.m., I believe.
I feel very strongly that the government will be open very soon.
I believe so too, right? So by the time this airs, it should be open. Longest shutdown in history. How do you feel that's going to affect markets? Do we think markets are going to be re-energized from that? Or is the pricing already set in?
Well, the markets are a little bit higher from where they were on day one of the shutdown. And the market tends to look through shutdowns for a couple of reasons. Generally, they only average about a week. This one went longer.
About
obviously.
8 days, right?
Yeah. This one went longer, obviously. Secondly, from the day historically and on average for the 28 shutdowns we've had in the past, from the day that the government reopens till 1 year later, on average, markets have been up 12%.
Okay.
So people look through government shutdowns, number one, because shutdowns, tend to come about because there's a lot of politicking going on. Number two, they tend to be very short in nature. And number three, markets tend to be up once the government reopens in the following year.
Right.
Yeah.
And you have an administration in play right now that are not yes men type of people. They're not just going to fall for anything, reopen it, just get it reopened. We're done. I mean, we saw the healthcare side, like it or not. I don't know what to do with the healthcare. Our premiums are skyrocketed. We saw that. We're
across the board
on the Affordable Care Act. We've seen them double. We've seen them triple and quadruple. Because of this expired and that expired, and they did not continue. So within this, that's going to pass potentially today at 6 p.m. Within this, those aren't being extended. Those extra subsidies aren't being extended. Right
now, they've agreed. They've agreed if we can get the government open again, we will look at that and
we'll look at it. Right,
but technically, they will not be extended
because it's probably a slippery slope. I mean, there were a lot of people making a lot of money getting subsidies. And I know this for a fact. People that I know shouldn't have been getting subsidies were getting reductions on their healthcare premiums, and they were still not affordable. And I think what we did is we took the competition out of it. We took underwriting out of it, which is a big deal. So now you have to pay for all the sick people and all the healthy people at the same time.
This has to do with all the healthcare controversies and what they're discussing on the government shutdown and reopening has to do with the exchanges, the state exchanges, and which are looked at from a federal level. But it's really about the state exchanges. So it's not everyone that's affected or not affected by this, but there are a certain group of folks that use the exchanges that their premiums will go up.
A substantial amount of people. Pretty much any small business, if you have health insurance, a small business for the most part, you're probably on the exchange. Any 1 and 2 man mom and pop
if you're
shop,
independently
you're on
employed,
independently
or you
employed.
run your own business,
or you have 8-10 employees. A lot of times
Yeah.
you're doing healthcare reimbursement, and you're saying, "Hey, go buy it on the exchange, and we'll do it."
Yeah,
Just
if you
'cause
own
it's
your
that
own,
much
if
more
you own your own
difficult.
small business, or you're independently employed, you're on your own. You have
And
to
Mike,
go
this
through it.
plays into your world, whether you like it or not, because the way it plays in is, say, a United Healthcare publicly traded company, right? And they're like, "Hey, we don't have to play that game, and we're going to raise our rates so high that you're not going to want to buy us." We've seen it on the Medicare recently. We've seen Medicare side say, "Hey, you know what? We're not interested in taking on new clients. We're going to manage our current book of business." And because what's the CEO's number one job? Look after shareholder wealth. That's their number one. And to do that, they have to make sure everything else runs well. But they have to make sure shareholders are taken care of.
There's a dilemma in this country right now. Is that there's a ton of baby boomers retiring, and we're aging. I'm a baby boomer myself.
I wasn't going to say, Mike,
but I am.
Yeah.
And we just, as we age and as we live longer, we just tend to utilize more and more healthcare. So it's a dilemma that's not going away in any quick discussion over the next 3 or 4 months.
And I haven't heard any solutions either.
No, because there's not a lot of great solutions. I mean, the fact is that we have more people demanding more healthcare insurance, and someone's got to pay for it.
That's right.
Government or individuals or companies or someone does. So it's really a demand situation right now because population's aging, a lot of baby boomers, and healthcare is just expensive, especially for high usage folks.
Right. Yeah. And so, and I do believe that we're going to get through it with your help, Mike. So you're going to come up with a plan. I know, clearly, obviously, brilliant. We do appreciate you on. We're about out of time. I know it goes by so quick.
It does go by.
The goal is always,
which means
people,
you may have to have me back.
I will. It's time in the market, not timing the market. I think we can pull that from this, right?
Well,
the sky isn't falling.
I want to throw something on top of that. I still feel the stock market, when you look at all the asset classes, you look historically, and I believe history, it repeats itself, and at worst it rhymes going forward. And stock markets are up 3 out of 4 years. On average, they're up 9 to 10% over time. And that's still the best return game in town.
Right. Yeah. So, Mike, again, thank you. Tony, thank you. Kolache Factory, thanks for feeding us.
Yes,
on this wonderful day.
Yeah, you got to try those, Mike.
I look forward to it.
Hey, what's that phone number? It's 402-557-6730. No charge, no obligation consultation. Call Bill and his team there at Par Advisor. That's 402-557-6730. And that does it for today's episode of the Big O Money Show with our host, Bill Altman.
Thank you.
Fantastic. All right. I love it, Bill. Thank you.
That went